Are your federal and state tax withholdings correct on your paycheck? Have you ever looked at your paycheck and wondered if the taxes taken out are the right amount? It can be confusing to know if your federal and state withholdings match what you owe. Let's walk through how this works so you can be sure you're not paying too much or too little. Your federal tax withholding depends on the information you give your employer on Form W-4. This form asks about your filing status, like single or married, and how many dependents or allowances you claim. Based on this, the IRS provides tax tables that your employer uses to decide how much federal income tax to take from each paycheck. If you don't fill out a W-4, your employer will assume you are single with zero allowances, which usually means more tax is withheld. The IRS keeps an eye on withholding accuracy through programs like the Withholding Compliance Program. If they find your withholding is too low, they can send a lock-in letter to your employer. This letter instructs them to withhold taxes at a higher rate, and you won't be able to change that without IRS approval. This helps make sure you pay enough taxes throughout the year and avoid surprises at tax time. State tax withholding depends on where you work and live. Some states have their own income tax rules, and employers must follow these when withholding state taxes. They use state-specific forms and rules, which can vary a lot from one state to another. If you work in one state but live in another, some states have reciprocal agreements that can affect how much is withheld. Employers are responsible for remitting these withheld amounts to the correct state agencies. From a labor law point of view, employers are legally required to withhold the correct amount of federal and state taxes from your wages and send those amounts to the tax authorities on time. If they don't, they could be held responsible for unpaid taxes. Employees generally can't sue employers over withholding errors, but employers must keep accurate payroll records and follow wage and hour laws. This means making sure withholding doesn't push your pay below minimum wage or violate overtime rules. To check if your withholding is correct, start by reviewing your latest pay stub. Look at the federal and state taxes that have been taken out. You can compare these amounts to the IRS tax tables or use online IRS withholding calculators. If your situation changes, like getting married, having a baby, or taking a second job, you should update your Form W-4 to reflect those changes. Also, review your state's withholding forms and rules to make sure everything lines up correctly. If you think there might be an error, don't hesitate to talk to your payroll department or a tax professional. They can help you verify your withholding and make adjustments if needed. Remember, keeping your withholding accurate helps you avoid owing money at tax time or giving the government an interest-free loan by overpaying. Staying on top of this ensures your paycheck reflects your true tax situation and keeps you in good standing with tax authorities.